Well, following the release of the August inflation report, the markets fell dramatically on Tuesday. So joining me this morning now is our investment advisor, Bruce Allen. Bruce, we got to talk about exactly what even happened here.
Sure. So what we saw on Tuesday was that in August, prices rose year over year by more than 8%. And there were many investors that were hoping, and those hopes were dashed, obviously, that inflation had peaked in July. And the fact that we had such a strong inflation number, even as gasoline prices came down, oil prices came down, what we saw was on the other side of the inflation picture, rents rose in price and also food prices rose.
Sure.
So the persistence of this inflation has investors alarmed, and they're concerned about how the Federal Reserve may respond next week when we're talking on Thursday morning.
Yeah, exactly. So, you know, this inflation number, it is steadily declining. We do got to keep that in mind. However, these numbers are still incredibly high. I'm just curious what the initial expectation from investors was about these numbers in the first place.
Yeah, I think that there were some investors that were hoping that we would see a taming down or a relaxation of inflation because oil prices and gasoline prices dropped significantly over the last 30, 40 days. And they were hoping that the inflation numbers would calm down. Instead of being up 8%, might be up 6%, and we had passed what they call peak inflation. There are many people that are hoping that the inflation numbers have peaked, and those numbers are consistently strong, and we're seeing very robust inflation data. And the concern is that the Federal Reserve next week is going to raise rates significantly. They're likely to raise them 75 basis points or 0.75%, which is a big hike. And there are some investors that are now concerned that they may raise rates a full 1%.
Wow. Okay, so people who have studied any kind of business, we know that the stock market is not the economy, but it is a strong indicator of the economy. We know that it ebbs and flows. So there are a lot of people that don't really understand what the numbers mean when we talk about the percentage dropping. Of course, yesterday we have the Dow was down 3.9%. We have the S&P 500 fell 4.3%. The NASDAQ plunged 5.2%. Break these numbers down for us. What do they mean? What is that threshold that people should say, oh, that's not good?
Well, certainly nobody likes to see any market declines, but I think that the key thing is when you see the Dow declining, and these numbers were all on Tuesday, we saw these big moves 2 days ago. When the Dow declines 1,275 points or the NASDAQ drops 5%, when you start seeing 3, 4, 5% moves in one single day, that catches investors' attention. And what you're seeing there at that point is investors really getting very anxious and withdrawing money out of the stock market at a fairly significant clip.
So my next question about that is there another area outside of stocks and bonds, that may impact consumers here?
Yeah, I think what we're seeing most notably is what consumers are seeing when they go to the grocery store is a rise in food prices and potentially a rise in rent prices. That's what we saw in August. The other area that we're seeing is all of a sudden mortgage rates, because interest rates have jumped, we're seeing a significant rise in mortgage rates. A year ago, mortgages were 3%. Nationally now, they're over 6%. And so that doubling of mortgage rates may have an impact on this housing market.
All right, and you're already anticipating that we're going to be talking to you next week maybe about this same thing.
I think we're going to be talking about a significant increase in interest rates from the Federal Reserve next week, and it's likely that they'll be raising rates roughly, the guess is right now, around 0.75%, Jordan.
All right, a lot of people just kind of cringed at hearing that, but we'll definitely have you back to talk about that because we know it's certainly something that's on a lot of people's minds right now. Bruce Allen, thank you so much for being with us. We appreciate you.